Hello, this is J.King, self-made millionaire, coming to you from millionaire.stocks.com. And today I'd like to talk to you about trading with skill, simplicity, and strategy. And one of the reasons we have these four quadrants that we base our core psychology on is these four quadrants: price action, momentum, volatility, and volume. These are for traders. And this helps you to identify who you are in the market when you begin to learn these four elements. And what I mean by that is there's a higher version of yourself that you want to tap into, but you're going to have to use strategy and you're going to have to use a system. There's a higher version of yourself as it relates to the market. In other words, when you learn these strategies, you're going to tap into a higher consciousness and a higher version of yourself, because these are four quadrants that several successful traders use. Now, most investors don't use these quadrants. They use something totally different. They use a different system to gauge the market by. So you're gonna have to determine if you want to be an investor or a trader. That's very important in the stock market. If you want to learn how to make money in the stock market, you're gonna have to determine, are you gonna be an investor or a trader? Now, me personally, I invested in Facebook in 2012, and I made 175,000 off of that stock. I held it probably for 3 years, and I only invested, I bought about 2,000 shares at around $28, $29, somewhere around there. And I held it for a long time because I recognized the opportunity, I recognized the potential. I bought it on a dip. A lot of people, they chase these IPOs, and there's a reason why you shouldn't chase IPOs. I don't have time to go into detail about the inside game of IPOs, but right after that IPO started to decline because a lot of the inside guys, they begin to sell their shares. I dip bought it 28 cents. And so I held it, and I sold it around 102, 103, somewhere around there. But that was a wonderful opportunity to invest in a stock. But a lot of times when you're investing in a stock, you want to look at the financials, you want to look at the balance sheets. You really want to go into more extensive research, looking at how they're monetizing their products, how they're working with other companies. You want to look at the earnings every quarter. And so you want to do a little bit more thorough research. But in trading, you don't have time a lot of times to do all of that. So these four elements are broken down for you so you can gauge the market better. Because me personally, I enjoy entering into stock and exiting out of stocks because I'm able to minimize my risk better. If I jump into a stock and it doesn't work out for me, then I'm able to reduce my risk. And so this is why I always focus on price action, momentum, volatility, and volume. And you'll hear me talk about it a lot because you're going to learn more about these four essential elements through experience. This allows you to trade with skill, simplicity, and strategy. You develop skill once you start to understand price action and volatility. The reason price action is so important, guys, is because there's several stocks that are going to stay at the same price for 3 months, 6 months, 1 year. And if you're dumping your money into those companies, you're not trading, you're investing. If a stock is going to stay at $3 for 2 years, you're not going to get any action out of that stock. There's no movement, there's no momentum. So what we like to do is we like to use the brokerage tools and other methods, forums, chat rooms. I'm always networking with different people, and I'm always using the tools that these brokers allow to find stocks that have price action and momentum, because that's what we're after. Now, what I'm going to show you is, remember now, in order for you to identify who you are in the market, you're going to have to determine from the beginning if you're going to be an investor or a trader. That's very important. Now, let's look real fast. If we look here at LINE, this is a ticker symbol for an energy company, oil and gas company, I'm sorry. And if we look at this LINE, this ticker symbol, then we'll find, look at this, the price action on this particular stock. So this is a stock that I want you to put on your watch list for next week. And we're watching this stock, and our purpose for watching this is to see if this stock will decline. I'm going to try to bet against this stock once it meets key levels of resistance. I normally don't chase stocks. Chase just simply means if you didn't get in at 65 cents, 70 cents, 75 or 80 cents, you don't need to be buying in the high ones or the mid ones, because you're chasing it and it may end up dropping in price. And so once this stock loses momentum on next week, we're going to look to bet against this. We're going to look to short this particular stock. These are the kinds of stocks that we're looking for. These stocks a lot of times will give you anywhere from a 50% to 200% return, sometimes in hours, sometimes in days. It may take a couple of days, but if you're patient, you will get a good a good return on these particular stocks. I want you to look at the historical quotes on this particular stock. Now notice in early February, this stock has reached 131. This is the day highs. And if you look down at the historical quotes, this stock has reached 131 and it hasn't been able to break this key level of resistance. So next week, it's going to be interesting to see if it can break these key levels of resistance. Now remember, before we enter into a trade like this, we're going to be patient. We didn't enter in at a low price. So our whole goal now is to benefit from the downside. What I mean by the downfall or the downside is that this stock starts to decline in its price. We need to find shares to short or shares to bet against this. And so remember, this stock hasn't been able to hold its gains. Notice it goes up to 131, then it drops all the way back down. Now see, this was a wonderful short. Think if you could have shorted this stock at 125 or 120 and you could have covered. Look at this spread at 47 cents the next day. This is almost a dollar spread. And so, I mean, if you would have shorted 10,000 shares, you almost would have made 10,000. If you would have shorted 5,000 shares, you would almost made 5,000. So this is close to like a 200 to 300% gain. So I want to show you guys that this stuff is really easy. It's not hard. Shorting stock is betting against it. You know, you borrow shares from the broker, you sell the stock, you sell shares that you don't own. And then, you know, when you cover at a lower price, you pay back the broker, and the difference in the spread is your ROI, your return on your investment. So again, add this stock, LINE, to your watch list. Our whole purpose for next week is to short this stock, and I'll be hollering at you next week. Have a great weekend.